Hi, this is Jack from Alpha Charts with the State of the Market video. Today is November 28th, 2020. Before we get started, this video is for educational purposes only. These are not recommendations to buy, sell, or hold any stock or security, and I may hold positions in some of the equities mentioned. Know your time frame and risk tolerance. Also, if you enjoy these videos, please like and subscribe to my YouTube channel, and I'm also on Twitter at AlphaCharts365. Okay, we're going to start like we always do with the SPX. Um, so we had the big run up from the March lows. We have this nice, beautiful consolidation in here. And just this week, we've now, I think, much more definitively started to break out, and the index is rising higher. Very bullish, nothing bearish about that. Now let's compare that to the RSP as we like to do. And in the RSP, you can see the equal weight SPX broke out way ahead of the weighted SPX and is already, moving higher, holding highs. It looks really good. Now let's compare that to the QQQs. So NASDAQ had the big up, sideways consolidation, still has not broken out yet. That's interesting, right? That's something different. We take note of things like that. Now, if you notice, there is a big gap right here also that I'm kind of watching. I'm not saying that this gap has to get filled, but it is here, and that's always a possibility. So the Qs have not broken out yet. S&P has, equal weight S&P has. How about the equal weight Qs? Now, see, they have also. So that just shows you how the big boys, meaning Apple, Amazon, Google, Facebook, have not really contributed to this rally. And just looking at Apple, you'll see it's in a range. And just look at Amazon, also within a range. Not really a double top at this point, but just a sideways consolidation going back and forth. So these guys, Apple and Amazon specifically, are still in their ranges, and they are holding back the Qs from really exploding higher from here. Where the equal weight is already broken out and moving higher. Moving averages are all going higher. So I think that is something just to take note of. Eventually, Amazon, Apple will start to move higher too. And when that happens, it'll be pouring gasoline on the fire for the indexes. So I think lots of things can move higher once everything starts moving in unison. Looking at IWM, which is automatically an equal weight index, you'll see that it has kind of had this long, choppy underperformance area, and now has moved to all-time highs and is actually leading actually the markets at this point. So that's kind of interesting too. So IWM looking really good. Moving on. All right, so let's look at the financials because they make up a heavy weighting in IWM, and they haven't quite gotten back to all-time highs yet. So, let's just go to weekly here. You'll see this was the 2007 highs. Hit it, retracted, hit it, retracted. So XLF is trying to come up to that level again. I mean, there's nothing I can see that wants to stop it from doing that. Pretty clear sailing here. But looking at IYG, now IYG are the financial services. Those are the big boys we're talking about. JP Morgan, Citi, Bank of America, American Express, Goldman Sachs, people like that make up the IYG. And again, this is a weekly chart. If you see, it looks very similar to XLF all the way until here. XLF was still trying to come up into this area where IYG is already breaking through that area. So I think that this IYG are going to be the leaders for the financials to move forward. And also, as long as they stay above this area and don't really come back and retrace too much, I think that bodes very well for the market, because if financial services are doing well, there's a good chance the market as a whole is in a bullish trend. All right, so that's XLF, semiconductors, another indicator index or ETF that's also tradable. That's a weekly. Let's go back to daily. As you can see, making all-time highs already. Again, just a very bullish looking chart right here. So financials doing great, semiconductors doing great, lumber is breaking out of this range and moving higher. That's again another bullish sign for the market overall. So far, everything we see is actually looking bullish with IWM leading, and smaller cap Qs, or everything but the mega caps, I should say. It seems to be doing really, really well. Moving on to SPX TLT, risk on, risk off. Let's just get rid of some of this noise in here, and you know what, it's in a beautiful uptrend, right? Nothing bearish about that. So that looks good. Looking at credit spreads continue to fall. Very bullish look right there. Let's look at the VIX sub 25 or 24 and a half down to into the 20ish range. Very bullish right there. Let's look at the equity only put call ratio. All right, so this is, it's getting back into the frothy area. It was there intraday a few days this week. So this is definitely something I'm watching. I think that this is a potential warning sign of a pullback for a day or two, something that looks maybe sharp or something that is going to try to shake people out of positions. So I think that is the that's maybe the potential canary in the coal mine is this put call ratio. Also, if you look at the CNN fear and greed index, we're getting into this extreme greed section again. So to me, that just says that maybe the market is getting a little bit overheated. Not that it's bearish in any way, shape, or form. Just that that things could be just getting ahead of itself. Let's look at also the this is over 200 days. Actually, I like the MMFI better. There it is. So this is the percent of stocks over the 50-day moving average, and I've highlighted this, this area right here. It's not a perfect area, things have gone in there, but when things tend to enter this area, you tend to see that pullback. It tends to be when the market gets a little bit overheated and just needs to shake out a little bit. Does not mean that market's going to tank. That's always a possibility, right? But more than likely, it just means that it needs a pullback, maybe closer to the 50-day, 50% line, and then it'll just kind of chop sideways and and get back into this area, and that'd be a very bullish thing to happen. So my thoughts on the market, again, what I do State of the Market videos is basically to say what type of market are we in, and everything I see is an extremely bullish market. So nothing in here says bearish at all over the medium to long term. Maybe in the ultra short term, we may be getting overheated. Again, we by percent of stocks over their 50-day moving average. We have the CNN fear and greed index, and we also have the put call ratio, right? That all says maybe a little overheated. But all the other things I look at says it's a bullish scenario. We have credit spreads looking good, VIX is getting lower. We have all the markets are making all-time highs, so everything looks good. Just be aware that if you want to start a new position, then there may be a couple days of shakeouts or things that could you may get better entries if that occurs versus now, or depending on your time frame, how long you want to hold. So that's the moral of the story. We are in an uptrend. Everything is looking great. Just be careful. We may get a retest of this area. I wouldn't be shocked. especially in the RSP, a retest of the breakout, that would be a good little shakeout, wouldn't it? That'd be lovely. Qs filling this gap, that's only, let's see what that is. To fill the gap fully, 7%, 7.5%. That's very possible, right? That would, and it would then make also a higher low, right? That would be pretty bullish. So just be open and aware of what can happen this week, especially, I think that I wouldn't be surprised if we do get this big bullish run into the end of the year, but good chance we're going to need at least one solid shakeout between now and then. And I think we can move much higher. Anyway, hope you all have a good week. Stay safe out there. Take care and have a good day.